Senek. He is Chief Investment Strategist at Wolf Research. Chris, it's great to have you. First of all, where is the savings coming from and who has it?
Yeah, so the savings is coming from the lack of spending during the pandemic, right? So instead of going out and doing sporting events and going out to restaurants and so forth, people stayed home and they saved the money. The other element of the 1.3 trillion of excess savings is coming from stimulus checks that were saved. Consumers in the spring and into the summer received these stimulus checks and didn't feel comfortable to go out and do the types of things they had done in the past, and so they stuck it in the piggy bank. And that leaves us with this huge pile of cash that's sitting in bank accounts right now.
And I've heard retail analysts talk about why they're not more cautious about the holiday season. You know, we've spoken about this a little bit in the last couple of weeks here on the program, and there are some folks who are skeptical that this applies to Americans writ large. In other words, they think it's just kind of mostly sitting in the checking accounts or bank balance sheets of the wealthiest Americans. How dispersed is it, and what are your expectations for how it gets spent?
Yeah, so over the near term, we think many of the same trends that have persisted from the retail sales report yesterday will go on, right? So online spending, at-home food, things of that nature. Looking beyond that, the upper end of income folks tend to spend the most amount of money. So the top 20% of income folks spend about 40% of the dollars. So I do think it's skewed towards the higher end. With that said, consumer confidence, higher stock prices, all that tends to benefit all income levels. But if we had to say one area would be positioned for, it'd be more on the higher end, the top 20, top 40% of income folks that have saved that.
So what do you make of the drop in consumer confidence lately? You know, we're all watching it as often a leading gauge, or at least a coincident one, with the stock market. The stock market seems to be shaking it off right now, but would you expect consumer confidence to rebound? Does it depend on what happens with the next round of COVID relief? And what should the next round of COVID relief look like if we're trying to help out those who are most hurt by the pandemic without accumulating more cash in the balance sheets of those who might not need the excess right now?
Yeah, so over the near term, you know, the trends are worsening on the virus. We all know that. And that's likely to lead even to a more stockpiled cash. At the same time, that's likely to push a stimulus bill through Congress, and we're not expecting one until later December, if not January. And that stimulus, when we get it, will be geared towards the lower end. So checks, unemployment benefits being extended, and so forth. At the same time, folks, because virus trends are worsening, aren't going to go out to restaurants, aren't going to go to entertainment venues, aren't going to go on vacations and stay in hotels, and there's going to be no business travel. So at the upper end, money will be saved as well. And so our sense is that looking out a few months, we'll have $1.5 trillion, $1.6 trillion of excess savings. And once consumers feel confident about a vaccine, and we've had extraordinary positive news recently on the vaccine front, once they feel the trends are going and a tailwind, I think consumers will come out of winter and start spending money again. And I think we'll start to see some of that, Kelly, at the start of the holiday season.
Shepard Smith here. Thanks for watching CNBC on YouTube.